Hey everyone. I wanted to go back and take a look at the SPY, and we are definitely in a confirmed downtrend. And the question now is, how low can we go? So, everyone wants to know where the bottom is, so they can buy at the lowest price. And the question is, does technical analysis provide any answers to how low can we go? And I think it does, and I'll provide some good examples and talk about some different ways that we will kind of figure out where the low might be. What technical analysis doesn't do is provide a definitive prediction. It only gives you a guide, some signals and some points to look at, and that's enough information to go on. To be able to trade and increase your probability of success. So let's go back quickly and recap the price action on the SPY since last Thursday. We got here the first signal of a break of support, and that was a signal to kind of alert us to the fact that the trend may be changing on the SPY. Actually, this would be considered the second signal. The first signal I mentioned before to some of you is that we had a gravestone doji on the weekly chart. Now, gravestone doji is when the price goes above the previous candle's high, but ultimately by the close of that candle it goes negative, and that's what we have here. It's not a very strong signal, this particular candle, because we didn't really make a significant high. It was more like a consolidation range, so it wasn't a very strong signal. Now, if the price had spiked huge up here, but still by the end of the week ended in negative territory, now that would have been a bigger, stronger reversal signal. But we got a small gravestone doji here. It wasn't too much of a concern, but when you start adding signals up, then that's when the meaning of it becomes more significant. So once after this break, we had a rally here, and everything looked good because we regained support. But on the next day, we had a gap down below the support line, and that signal is a pretty strong signal. But again, the market kind of reacted positively. Probably have a lot of dip buyers, buying the dips, and we actually broke down through the downtrend line here. So everything looked positive, except the close wasn't that strong. I called support at 210.50, and the close was at 210.46, 4 cents shy of support. And although that seems insignificant, a strong stock or a strong ETF should be able to close above the support line, and it's not that significant, but even a few pennies below does show some signs of weakness. And we created this rising channel intraday, but the final confirmation for me was this gap down on Friday. And when we gapped down on Friday like this, it was clear to me what we saw here. This rising channel was actually a bear flag, and the bear flag is a pretty strong signal, pretty reliable signal that more downside, the price has more downside to it. So take a quick look. This is what a bear flag looks like. It's the same chart. I removed all the other lines so you can see pretty clear. It's a sharp move down. I guess the move would start from here. Sharp move down, and you got a rising channel. At the time it happens, you don't know if this is a rising channel or if this is a bear flag. The signal would be the break of the rising channel line. Unfortunately, we didn't get a nice smooth break. We had a gap down, but in either case, this was a confirmation that this was indeed a bear flag. One way to tell a bear flag, and I wasn't really paying that much attention, but I should have, is in my opinion, the flag is a more narrow, tight rising channel versus something that's more powerful that rises up to here, comes down to form a channel, and the channel is much wider. A bear flag is much tighter rising channel here, and you get a breakdown, and as you can see, the shorts jumped in and shorted the market. Now, one thing to notice is that we opened here, and there was an hour or 30 minutes of rallying, trying to get the price back above the trend line, and we clearly failed at that. This is your second chance to unload positions and make adjustments, knowing that it's probably going to go lower. So as a credit spread trader, I would close out puts here, and go a little bit heavier on the credit spreads. So the question then is, how low can we go? And let's take a look at some ways that technical analysis can provide some guidance as to how far price might drop to. One of the first things you want to take a look at is something in technical analysis called a measured move. And a measured move is based on the pattern, a guide to where the price target might be. So I've got here a couple of examples of measured moves I've done in the past, and the two that I have are head and shoulders, and I'll also show you the bear flag one. But this was the October 2014 time frame on the daily chart of the SPY. You can see here when I was looking at a chart around that time, I noticed a more head and shoulder type pattern forming here, with the left shoulder, the head being in this area, and then the right shoulder being in this area, and the neckline of the head and shoulder is right here. And let me remove this. So this would be the head and shoulder pattern, and the measured move, what you would do is you would clone this, the distance between the neckline and the head, and oops, I did not do that correctly because I need to have it be the same distance. So I can only grab it and move it. There you go. Now if I move it below the neckline, this would be the measured move. And as you can see, the measured move was correct in predicting the October lows of 2014. Again, take a look at another chart, which is DDD. Another head and shoulder pattern in early January. We had a left shoulder here, the head here, and then the right shoulder here. And then we had the neckline here. And as price went down through this neckline, we can do a measured move to kind of figure out where the price may be going. And lo and behold, when you take a look at this measured move, voila, there it is. This would be the bottom. Now, this is not a, the permanent low where, this will be, this is it. It'll go up forever from now. However, what this is it's the chunk of the move where you can make your profit. This is the big move down here, dropping almost, if you short it at the neckline here, this is a 40% short. So this is the bulk of the move here, and you would know to take profit around this area because of the measured move. And you get a little rally here, and later on you see that DDD actually again breaks this low and goes lower. So it's not the it's not the permanent low, but in terms of the trade itself, for the short here, you would know that this would be an area where you would want to cover. So perhaps this high, you would put your stop for covering your short, or you might or take a profit here. So that's measured move. That's one way we can figure out where we're going with this. So if we take a look at this bear flag, the measured move for a bear flag is to get the width, the length of the flagpole, and go ahead and do the measured move. So here you see that we've clearly dropped below the measured move. So and then we kind of recovered around here. So that's one thing to look at. Now keep in mind we're looking at the hourly time frame. So this, the hourly time frame is not long enough for any significant move or the pattern to be significant, but it is still gives you some guidance as to where we could drop. Um, Always the longer the time frame, the daily and especially the weekly, the patterns will work much better. Um, Another thing that we can look at to determine how low we can go is to look at support and resistance. If we look here on the hourly again, we can see that we drop down exactly to this support level. Okay, if we look here, we can see support here. This would be the highs of which we gapped up above, and we dropped right down to support level, had a nice reversal candle here, and then went higher. Now, does this mean this is the low? By no means is this the low, because right now we're in the high, lower high, lower high, lower high, and still yet another lower high. Now, as you see, when we come back here, this was a support level which we broke through, and like I said before, whenever we break through a line, we're going to retest that line. We're going to try and go back above the line. Now that can happen on the 1 minute chart, on the hourly chart, or on the daily chart. But we will always try and go back. Well, okay, I can't always say always, but we'll most likely go back and try and retest the line. And in this particular case, the line so far is rejecting the price advance. So you see these long legs at the top is price moved up, but by the end of the candle, it was rejected down below the line. So is this the bottom here? Probably not. It looks like as of today's close, it looks like we'll get rejected here, and we'll at least retest this support line. And if we break it, the next level we're going to go down to is at least 206.13. 206.13. So looking at support and resistance can give you an idea also of where and how far we can go. Now this is just looking at the hourly chart. We can also take a look at different time frames. For example, this is the daily time frame. Now when you look at the daily, you should also see the similar support levels and the hourly, but you might see other support levels that you can't see as clearly on the hourly time frame. So for example, right here, 203.67 might be a support level. This is where we gapped up, so the gap might provide some support, but as we see, this support line has been violated so many times, it's not even, you may not even want to consider it. But definitely on the daily time frame here, here you have at 197.96 a very strong major support here. So any of these other levels can be broken through, but this is definitely a strong support level here. Let's go ahead and take a look at the weekly chart and see if we can get some more information on support and resistance. So on the weekly chart, you can see less noise. You can see three major support areas here: 198.10, 188.84, and 180.95. So this is also a major support line here. We've touched this so many times in January and February that it's a major support line. Another method to determine how low we might go is to look at moving averages. So here on the weekly chart, we have the 10-week line, which is a very important line. This is true for most stocks. The 10-week line, you'll find that most rallies will occur above the 10-week line. So for example, here you got a drop, and then once it recovers the 10-week line here on huge, let me zoom in here. Once we recover the 10-week line on, once we recover the 10-week line, you'll see that the price will advance above the 10-week line. And of course, we do breach it sometimes, but we don't close above the below the 10-week line until here. So the 10-week line is an important line. If we go back and take a look, we have not reached the 10-week line. The 10-week line right now is sitting at 206.35. 206.35. So we might head to that price. If you look on the daily chart and the moving averages there, the averages you want to take a look at on the daily chart are the 10-day and the 50-day and the 200-day moving averages. So we've already breached the 10-day moving average, and we're right in between the 50-day right here and the 10-day. Now, the 10-day line, the 50-day line is going to supply your support, and the 10-day line will be your resistance now. And like I mentioned before, once you break a line or a trend or a moving average, you can easily come back up here to retest the line and head lower back down to here. So that's something that's common that happens. But one way to know how low we can go is to look at this moving average and say, well, we might hit 206.14, and we would look for a reversal at that point. So that is another way to determine where the price might go. Let's see, what else do we have? Okay, we've done that. Okay, another way to determine how low we go is to look at the trend lines. I have here as an example a trend line that extends back from September 2011. This is pretty much the bull market that we are currently in, and it's a beautiful channel. People are making lots of money here. This rising trend line will be our support line, our outermost support line. This trend has been pretty strong, so there's actually an inner trend channel here that started around this point right here and was held here. It was held here, breached here into the major support line, but it was held here again in February. So in the February low bounced off of this trend line. So right now we are here, so we can easily get to 199.87, and if in a deeper pullback, we can get as far as 193.33. The other thing you can look at are the Bollinger Bands. These are not as reliable as support and resistance, but sometimes they do offer some insight. If you can look here, the bottom Bollinger Bands provided support, and it bounced off of it several times. Bollinger Bands are not, like I said, not that reliable. You can see here. What you want to see here, if it rides along the bottom of the Bollinger Bands, is to look for an outside day where the price is outside below the lower band, and that might be a signal that's a low point, and there might be a reversal. Here you do have some bounce off of the lower band. Here a little bit of low bounce. Here the price was way below the Bollinger Band, outside the Bollinger Band, and we got a reversal. It's also true on the top side, where you break the band here and you head lower. So the Bollinger Band is another way you can figure out if it's where we might be headed. Now Bollinger Bands can go lower, but that's just some guidance there as well. Here I've drawn the hourly trend line, and if it gets down, it might get down to 205.80 before we get a rally up, but that just doesn't necessarily mean it's a low. A swing low. It's just a trend line low. Let's see here, and another simple way to kind of figure out how low we might go is to look at the pullbacks in the past and the percentage pullbacks. So this is the weekly chart again, and I've taken some pullbacks in the past, recent past. Here you have the October, which was a 9.92% pullback. You have smaller pullbacks here, 5%. You have a smaller pullback here of 6.38%. You've got a pullback here of 8%, and you got a pullback here of 9.79%. So it's been a pretty, we've had some mild pullbacks, 6, 5, 9, and 8. So if we can just do a similar measurement, let's take this high here, and then let's just say we could do it at 9.5% pullback, or let's see, 9.5%. Well, let's just keep it closer to 10. 9.88 is good. So let's just say we do a 9.88% pullback. What do you know? We look here on the left, and we see here a support area, right? So let's see here. We do it here. We see here is kind of a support area. So it's very possible we get a pullback to this area. It would make sense on the chart to pull back to this area of support, which is 189.61. Now that's a 10% pullback. But let's go ahead and do like a 5 to 6% pullback and see what we can see. So from the top here, let's measure down like 5.5%. Let's say around here. Okay, well, if we do a 5% pullback, we're right here in the support area. So why not just pull it back to here and get about a 7% pullback? So let's say we get a 7% pullback. We would be at this support level. So going by percentages, you know, a 7% pullback or a 10% pullback would bring us back to these support levels. And that would make sense for a pullback to go that far before we head forward. You know, this is kind of, you know, a pretty significant pullback because we'll keep on retesting this low, and it looks like we're making some sort of inverse cup and handle breakdown here. So hopefully we don't go that low. We might go, you know, maybe to here or so and make it a shallow pullback and head higher. But everything is in the cards. You never know what's going to happen. So that's pretty much the video. What happens, we don't know. We just have to look at as price reaches each point, each signal. We have to watch it closely and see if there's any reversal signals. When there's a reversal signal, reversal candle, we can make an entry and have our stops be close by in case, you know, in case the price moves lower. So hopefully that can provide you some insight on how to make an educated guess using technical analysis of where price might go. Thank you.